Danielle DeMarco, she's our real estate investment mortgage expert. She's going to talk a little bit about the mortgage market. Danielle, if you want to come on, that would be great. And we can let you take the presentation.
Perfect. Thank you. Yeah, to kind of, I know you guys had mentioned quickly on there, touching on, a million plus. There's some recent changes that definitely came into effect in the market in December, some relating to new builds, some relating to first-time home buyers, and then some changes on the higher priced homes. So now over a million up to 1.5, we can look at doing high ratios still. So an insured mortgage, there's still the tiered system. So you need 5% on the first 500,000 and then 10% down payment on anything above. So it does drastically decrease the amount of down payment you need. Just keeping in mind, obviously, the less down payment, the higher the mortgage balance, and the higher the mortgage balance, the higher the payment. So we just need to keep in mind the payments at the end of the day when you're putting down the lower down payment. But it is going to open up the, 1 to $1.5 million market for a lot of home buyers that necessarily couldn't purchase in that market before because they needed 20% down. So kind of a cool change that was made. Just to kind of touch briefly, there are some changes coming January 15th to refinances, going to 90% of a home value instead of just 80%. Just to clarify, we don't have all the details yet. So in 2 weeks when we meet again, we're going to chat about that and what that looks like and what the requirements are in order to be able to access 90% of your home value instead of just 80%. So we will get to that in a couple of weeks once we have some more details on the program itself. What we wanted to kind of chat about today is what to watch for in 2025, whether you're coming up for renewal or purchasing a home. There is a lot of mortgages coming up for renewal in the next 2 years here. In fact, the highest number of renewals we've ever had in Canada. So that means there's a lot of clients, homeowners that are going to come up, rates are going to go up, and we're going to have to look at your mortgages to kind of see what can we do to keep payments reasonable, things like that. So lots to talk about as far as this next year. So I know Tim and Azad mentioned rates decreasing. On the fixed side of things, we are relatively stable. We will hopefully see a little bit more of a decrease as we head into 2025, but where we might see more of a decrease is going to be the prime lending rate, which is the variable side of things. But we are kind of anticipating the fixed rates to remain pretty stable and not to see any drastic drops. Now, with that being said, the lenders always catch on, of course, and need to make their money, of course. So as we see the prime lending rate start to go down, we're going to start to see some of those discounts on the variable rate mortgage become less. So for example, right now, if you can get prime minus 1%, let's say on a variable, if prime goes down another quarter point here in the next couple months, we might see that 1% discount off of prime decrease to 0.75 or 0.85, just so that the banks can still make their margins. So something to keep in mind, waiting for interest rates to change is not necessarily going to be the best idea. We've got the spring market coming up. We're likely to see prices start to increase again here. So waiting for interest rates to drop. Again, we talk about timing the market all the time. It makes it really tough. But your impact on buying power. So I chatted with a client today who was talking about waiting till mid 2025, end of 2025, until she got a raise to kind of see, okay, well, how much more could she spend? And in all reality, because of where rates are going, where rates are at, where prices are going, we're going to see some more competition heading into spring, summer. So waiting necessarily doesn't make it the best idea. You might be able to spend a little bit more because you've got your salary increase, but prices are going to be higher. So again, just kind of touching on, waiting for rates to drop in 2025 isn't something I would necessarily be waiting for. Renewing your mortgage. So again, a lot of you on this call are already existing homeowners, whether it's an owner-occupied residence or rental properties or a combination. Do not sign on the dotted line. I cannot stress this enough. What you're doing with your current properties and your current mortgages plays a huge factor in what you're able to do down the road. So we really want to be looking at these opportunities where you're coming up for renewal to kind of see how can we change that mortgage? What adjustments can we make to better help you qualify to continue investing in real estate? So always reach out to a mortgage broker, whether it's even just to compare rates if we can't make any changes. But if we can make changes, it's really critical to be doing it when you're coming up for renewal. That's the most ideal time. So definitely don't just sign on the dotted line. Something else we can do is consolidate debts. So whether that be for cash flow purposes, let's say you're not intending to purchase another property, but we need to get your monthly payments a little bit more aligned with what they were before, but you're coming up for renewal. So now your mortgage payment's jumping up. We can consolidate outside debts into equity you have. With Calgary house prices, for everybody that's coming up for renewals that had 3, 4, 5-year terms, you're going to have a bunch of equity in your home that we can look at accessing to consolidate those debts. Not only does that help on a monthly cash flow basis with outgoing money, but it also helps you qualify again for future properties. And it's not all about the rate. We have touched on this a few times. Looking at the terms of your mortgage is just as important. For those of you that are out there that might want to do a BRRRR strategy, like Azad mentioned, we really need to factor that in when we're determining what kind of rate and term we're going to take on that refinance. And then also on top of that, if you're doing a flip, we don't want to be locking in. We don't want to be having huge penalties. We want to be taking into consideration things like that to make sure that the financing and the terms are, matching what the rate is. It's not just rate. And then for investors, we kind of touched on this already, but qualifying is huge. It's getting harder and harder to qualify for mortgages. We have stress test rates. We're qualifying at these higher interest rates. For example, if you have a home equity line of credit, did you know that it's actually harder to qualify for a mortgage or another property if you have a balance owing on a home equity line versus if you have that same balance on a mortgage? So just little things like that we're going to revisit, we're going to tweak, we're going to look at to make sure that you're setting yourselves up properly heading into 2025 for future qualifying. And then cash flow considerations. Tim and Azad mentioned this already. We've got rents stabilizing. We're not seeing a huge increase in, what we can charge for rents right now in Alberta. So structuring your mortgage in a way that lowers your payments so that you can have the most amount of positive cash flow is going to be critical. Again, just for like daily living and expenses and surviving, but also for qualifying down the road. So suffice to say, in 2025, whether you're purchasing your first home, purchasing an investment property, coming up for renewal, we need to be looking really carefully at how we're setting those mortgages up so that you can keep investing, so you can keep cash flowing, and so that on a monthly basis for any of you that have mortgages coming up, we don't want your payments to be increasing $1,400, $1,500 a month. We want to be able to look at what options we have to kind of keep you paying what you're paying now so that you can keep building your portfolio with real estate. So that's what I wanted to touch on for anybody that's coming up for renewal in 2025. Please do reach out and make sure that we're looking at restructuring your mortgage if we need to, so that you're successful in your future investing. So that's kind of it.
Awesome, Danielle. Thank you so much. I know it's a hot topic right now with what to choose and who to go with. And you know what? They should talk to you first and then decide after.
It doesn't hurt to compare. And like I said, whoever your lender is, whether it's a bank or a trust company, they're sending you a piece of paper to sign. They're not asking you questions about, hey, how much debt do you have outside your mortgage? Hey, do you want to purchase more properties? What are your plans? What are your goals? So by signing on the dotted line, you're solving one problem. You're getting a new mortgage, but you could be creating a bunch of different problems and hindering what you can qualify for in purchasing additional properties. So always good to get a second opinion.
Oh, thanks, Danielle.
Thanks, Danielle.